Okay, everyone, welcome back to another episode of Line Your Own Pocket. So I'll just start by saying, for you guys, we never miss a beat. We always put out an episode. We record them in advance. It's great. For us, this is the first time me and Dave have actually sat down in two weeks.
At least two, yeah.
Feels like longer. Felt like longer than that. But yeah, so if we're a bit rusty, we're knocking the rust off. Just forgive us a bit because we haven't been doing this, but we have a good topic. We recently had one where we had to kind of butt heads a little bit, so now we did one where we get to kind of hold hands and sing "Kumbaya" because I think we'll be in full agreement here. Maybe there's a caveat I could push back on, but we're going to talk about buying power and how much you should use and when you should use it, and is using all of it good? Is using your margin good? How crazy do we go? How much do we YOLO? So that's going to be the premise of the episode. So why don't you get us started, Dave, with what you're thinking?
Okay, so one of my traders that I'm coaching came to me. It's been a few months now, but he came to me and he said, in the most like in despair almost, saying, "Dave, I ran out of buying power. Like this is terrible. What do I do?" And the first thing I think is this is awesome, right? Because what it tells me is you fully internalize the process. You have you have been on a path to confidence for the strategy you're trading. You're trading it, you've built up your size slowly over time, and so much so that you're running out of buying power. I mean, this is an awesome problem, right?
Mm-hmm.
And it took me it took me a lot of years to understand that it's a good problem to have. And that's partly because of my upbringing. My dad was very conservative with money. And I remember him, telling me about investing and teaching me about margin. And I don't remember all the details about what he said, but I do definitely remember one thing he told me to avoid like the plague, and that is a margin call.
Mm-hmm.
Right? You would never want to, like, this would be the worst thing in the world. So, and that was my upbringing and that was my mindset, very conservative, and that would be a bad thing. That would be like totally irresponsible if you get a margin call.
Well, and it's funny now that if anyone uses Interactive Brokers, you definitely saw it where it's like the welcome message now. It pops up and it's got a little box and says, "You're not in liquidation risk yet, but you're getting close," and it's got a giant wall of text. And yeah, I agree wholeheartedly that when I'm seeing that, that's a good thing. Actually, I kind of miss it if I go a couple days and I haven't seen that. So, but let's start first of all, why do you think that user was so in despair about the fact that he was seeing that he was out of margin and he couldn't take trades? Do you think is it a risk thing? Is that why he was nervous, or do you think there's something else kind of at play?
Well, for him, I think he thought he had reached a ceiling in what his trading could do.
Okay.
And I think that's the first thing you think. When you're not really, or at least I don't, like, monitor my buying power all the time, watching it, tick by tick or anything.
Mm-hmm.
So usually when it happens, it comes out of nowhere. And the first time you see it, you're like, oh, like like you're right. It's an error message that comes up. You feel like you've done something wrong.
Mm-hmm.
But ultimately it feels like a ceiling to your trading. You can't get bigger. But what people don't realize is it's a really good thing when this happens because of the reasons I listed before, but also the hard part is coming up with the ideas. The hard part is coming up with a strategy that works. The hard part is coming up with a strategy that works and getting confident enough to trade it with size. That's
Mm-hmm.
the hard part. Once you run out of buying power, that's a totally that is a really fun problem to solve because there's so many ways to solve it in a way that, like, so most traders think they're at a ceiling there, but there's lots of ways to solve it to sort of optimize your buying power and figure out creative ways to use it. Those are fun problems to solve.
Well, and I think we should first tap on that, the trying to find ways to use your buying power, because I think that's, again, hugely important. Where a lot of people look at this and say, oh, well, I want to always keep some cash on the sidelines or whatever. And they should look at it completely different, where if you have a single dollar of unused buying power, that is potential return wasted. Like say you only make, 2% on your strategy. Your year is like, it's not a good strategy, but you still make money on it. Well, if you have $100,000 sitting there, you should look at it as, oh, my strategy makes 2% a year. I'm missing $2,000 by not investing that particular money inside of that strategy. And that's the way I think the first reframe kind of helps, is that as soon as you get to that point, you're hitting that level. But then the other thing that I think that's important is when you hit that level, I think of it as kind of freeing. It's like, okay, I have nothing else immediately that I have to do, because I have strategies that are utilizing all of my buying power, and hopefully they're profitable in the long run. It almost kind of like opens up a little bit and says, okay, now I get to work on what's next. I don't have to, I'm not pushing to get, I feel like I hit a ceiling kind of just like that guy did, but I frame it myself as a good way, saying, okay, now I get to tweak and to play and to do more of the fun stuff and less of kind of building my way up to that ceiling, if that makes any sense.
Yeah, I think you know, understanding your constraints is often freeing and sort of it reduces your universe by putting restraints on you, but it helps you think very clearly and focus on the real problem that you're dealing with. So, yeah, I think that's totally true. Um, do you remember the first time you ran out of buying power?
Yes, and I was terrified. And I think everyone kind of is, right? Because you go, oh no, you get a notification or a message or an email, and you get the dreaded margin call, and you're like, okay, you get that first kind of instant fear, but then you look at your account and hopefully it's green or very slightly red, and you're like, okay, well, by the end of the day, by the time I unwind a lot of these positions, it will go away, and that's fine. But yeah, I definitely think it's because it's such a scary word. They have like scary movies. I don't know if you've seen the movie Margin Call. They got scary
Yeah,
movies about it. They've got all like
yeah,
it's memed about online. So I think it takes a second to kind of reframe that as, okay, this is actually a good thing, right? I've done something well. My problems have now changed. It's not about building enough strategies to max out my buying power. It's about optimizing strategies and refining and doing things like that. But yeah, that first time scared the crap out of me.
yeah, yeah. The same with me. I mean, I didn't. I think the first time it happened, I was trading with Scott Trade. Had a Scott Trade account back in the day,
Oh, yeah.
and I remember it happening. Uh, and like I said, my upbringing, like I thought, like somewhere deep inside, I thought, okay, like are the police going to come and tell me that I did something wrong? Like,
Yeah.
is there going to be some fine? Like it's like it was just so ingrained in my upbringing that I just it's hard to shake the nagging feeling when that error message pops up.
Well, and I think it's a good time to kind of separate too between day trading and swing trading, because I think those are different as well. If I'm ever getting that margin call and it's all on my swing trades or long-term holds, I'm still terrified, and I think that's kind of rightfully so. But the way to look at it is, is this running up against the limits of your buying power? Is it actually increasing risk? Because in a lot of cases, it's not, right? It means you got a whole bunch of longs on, maybe you got a whole bunch of shorts on as well, and the fact that you were able to use buying power to hit both sides of the markets, the longs and the shorts, and it spread out a bunch, maybe 20 different trades because you're auto trading instead of one, and because you went all in on the account. I think that's the different thing, is people kind of equate margin call to, I'm taking a whole lot of risk. But what we're doing as systematic traders, quite often spreading out risks across different trades, different strategies, long, short, for me, different time frames as well. So I'm less worried about that. I just think that is something to, because that is a scenario where you could actually have somebody show up at your house eventually if you're
Yeah.
on margin and then something happens crazy overnight, a war or something. You could owe them a lot of money. But yeah, when you're
Yeah.
talking day trading, you're like, well, at the end of the day, this goes away. At the end of the day, I always get to the point at the end of every day where I have a little bit of excess cash in my account, not only margin, so that it's less scary. But yeah, I think it's important to make that differentiation instead of someone going, oh yeah, so I'm just gonna, YOLO a fart coin or something or some crazy stock and just it's okay to do margin. We're saying responsibly and in a controlled risk manner, again, preferably reducing risk by using more margin.
Yeah. So what dawned on me early on was having your risk. When you're trading a system and you have your risk under control, the buying power is largely irrelevant.
Yep.
So, you might have a whole bunch of money at work. I call it money at work, like how much you have allocated. But that doesn't mean you're going to lose all of it if the trade goes wrong. Like if the trade hits your stop, right? You're controlling your risk. So you're risking a certain amount if the stop gets hit. That's completely relevant from how much money is at work. And in fact, you probably there's some really good strategies that have dynamic position sizing where you're taking large positions for small amounts of risk. So it's sort of designed to use a lot of buying power, and that's how it works. So it is. They're of course related, but they're very different concepts when you're doing it right.
Yes, and again, I think it's you have to. I hate using like VAR, like value at risk. That's a metric that some people use that I think is just really, really dumb. But it's kind of like that. You're just looking, and that's the one of the main benefits I think of trading when it comes to day trading versus swing trading. Is that value that you're actually risking is way easier to control and to quantify because you're like, okay, I'm risking $1,000 on every trade, and I've got 5 trades open. So unless one of them halts or something craziness, it's an incredibly rare event. I know at the end of the day, worst case scenario, I'm losing $5,000. Right? If the stops are in and all that's placed, it's good to go. Again, the risk gets a little bit scarier when it starts to come to dealing with overnight risk or gap risk, which again, depending on what you're trading, can happen. But hopefully, you've kind of prepared for that in some way in your system because again, that can be problematic. But again, I always like the idea of using margin to reduce risk. And again, in a perfect world, every trade I'm putting on is from an uncorrelated system or is uncorrelated in some way. Like I'm looking down now in my day trades, I've got a bunch of longs, a bunch of shorts. So as more trades come in, it's not like I'm adding additional risk to them because eventually I'll have 20 trades on and some will be long and some will be short, and you can go from there. So that's the real thing to differentiate is right margin or lack of buying power or all of that does not equal increase risk, and make sure you're focusing just on the risk side of things. And whenever you get that warning, you go okay, and calm down. It'll still probably get you every time for a while.
Yeah, so I guess we should also mention one of the differences between day trading and swing trading as far as buying power goes is intraday day trading, you're getting more buying power than overnight swing trading. So I think you get twice your money, up to twice your money in margin for overnight, and then it varies quite a bit for intraday, but it's at least 3, sometimes 4 times your buying power just with a regular retail trading account.
Yeah, and then when you get to a certain size, you get portfolio margin. You kind of get the whole thing, and yeah. So understand those rules, right? Understand where you are in them, how much money. Because sometimes I was talking to a trader once who didn't know I think it's 110,000 in Canada where you get portfolio margin. It's going to be different, right? We're in different countries, so it's going to be slightly different. And he was like just shy of that. I'm like, well, just go put in an extra couple grand and then you're at portfolio margin. He goes, and then opened up a bunch of things. So definitely understand the rules. I don't know. I know in Canada it's different per broker. I don't know if it's more federally regulated in the States or not, but it's definitely something to keep an eye on. But let's move on to, okay, so we have buying power or we have the margin. We've determined that it's good when we've kind of reached the limit of that. Again, assuming all of the caveats we said, right? You're not just increasing risk or YOLOing into something crazy. So then what? right? So we obviously aren't done. The whole point of kind of systematic trading is you're never done. So where is it that you get to the point where do you just leave it? Say, okay, if I'm utilizing my margin every day, I'm good to go. Do you try to optimize further? Is there a kind of next step after you hit that button to continue to crank up the amount of money you make? Because it's no longer applying more risk and capital. You've hit that limit. So where do you go to then?
So it's a good question. I think a lot about efficient use of buying power. So what does that mean? You hear some people sometimes brag about how their account is a certain size, right?
Yeah.
But really, the thing they should be bragging about is that they're making a certain amount of money with a smaller account size, right? That would be the thing to brag about. And that's the goal, is to make lots of money with a small amount of capital. So that's really the ultimate goal and what you should be doing. Any disagreement?
Yeah, no percentage gain. Again, I'm more of an R kind of multiple, but yeah, if you can make, it's better to make 50% with $100,000 account than to make 10% with a $200,000 account. That definitely, where I thought you were going is when you said efficient use of capital was just, am I hitting it every day? Because if not, why do I have that money in my account
Right.
at all? Versus, I was talking to a guy who had a HELOC on his house, and he had $1 million in his brokerage account, and he had a HELOC on his house for $500,000, and he was paying like 6-7% interest rates on it. And I asked him, and he never got anywhere close to utilizing half his account because he was just terrified to put that much in the market. So pay off your house. Like,
Yeah.
just if you're not using the capital there, because then you're kind of making 6% after tax on the other side, and then utilize. So yeah, sometimes there's a lot more freeing activity that happens with a smaller account because he was way more comfortable. Now, ideally, in a perfect world, he would utilize all that money to make the highest percent he could. But I'm like, you're human, so. And I was like, it's a HELOC. If you want it back, you
Yeah.
can take it back if you want.
Yeah.
But
And just to be clear, HELOC is home equity line of credit to borrow against your house, for people that don't know that term.
yeah,
And we're not financial advisors by any means. So
absolutely not.
we're don't take anything we say as gospel by any
Yeah.
means. Do your homework. So here's one experiment I did. Um, I said I didn't follow my buying power tick by tick, but in my application that makes trades for me, I started logging it throughout the time.
Okay.
And I actually put a chart up of this on my site. We'll link to it in the show notes. But it's really interesting to see your buying power utilization over time. And what you'll notice is usually when you run out of buying power, it's usually like one position that takes up all the buying power. And if you keep close tabs of what you're doing, if you're taking a lot of positions and keep tabs of which one it is and how much each one is consuming, you can use that to really optimize what you're doing. So a lot of times what you'll see is, so I had a chart of like 0 to 100, how much of my buying power is utilized at any time.
Mm-hmm.
And it's not like it goes to 100 and is pegged there. It's usually way lower than you might imagine, but then you have these huge spikes because of you're taking some large position that happens to use a lot of buying power, and that's what causes the buying power to be consumed. So once you examine that and look at that and think about it, there's lots of things you can do to make sure that doesn't happen again, or use your buying power more efficiently. So the first step is to do it by symbol and keep track of that over time. And I can guarantee when you do that, you will come up with ideas about how to do things differently or
Well, and I
to
guess
do things more efficiently.
so. I have an idea. So, and then how is it that one takes up that much? Is it just because that the risk on that trade was just so tight that the amount of buying power required in order to take the trade was so much higher because, right, you're risking a very tiny amount. Is that usually what happens? Is that you've got one stock, or is it just that this stock is such low movement or ATR or something like that that to try to kind of get the same return that you're after, you have to trade smaller? Is that usually what's happening?
Yeah, so there's a couple different. That's one scenario where you're just, you have a high price stock. Your strategy finds a low risk situation that where you can take a lot of, use a lot of shares. So and if your strategy uses dynamic sizing like that, your money at work for any position is going to be wildly different. So
Hmm.
that a lot of times that's what happens. And once you figure that out, one thing you could do is in your code, and I've done this before, have like a maximum money at work to be used. So like by default, it would use the full amount, but you could have some threshold or some ceiling that says, okay, even if normally you would be using more, maybe you use something smaller than that just for when this situation occurs so that you can take more positions in your strategy and you're not stuck with this just one position. I mean, let's say you're trading, your strategy trades multiple times a day, dozens, a couple dozen times a day, maybe. Then you don't want to get stuck in one position and not be able to take all those other ones. So there's things you can do to spread that out so that one doesn't consume all the buying power, and you can, you make room for yourself to take as many positions as you need for your strategy to work well.
Well, and that's kind of where I was going with that, where I think it would make sense. And I think the main thing that people have to do when they're maxed out of buying power is to continue to run their back test at the end of the day to look at what they would have missed. Because, what if, for example, the stuff that you missed wasn't that great to begin with, right? That tells you a lot of things where, hey, it probably means that trades taken kind of later in the day aren't as impactful. What would happen for example, that max buying power per trade rule, I could see that as a good thing. I could also see that as a bad thing, because what if just by default of the fact that these things are having such low risk entries, you would have been better over the long run, just almost at that point YOLOing a large percentage of your account in that particular trade. If that ends up being the move, then you should stick with it. So I think that's a lot of things that people can do is do the what if, and it should be fairly easy to do, where
Yeah.
you run your trades at the end of the day, you run your back test, you do your normal reconciliation. There'll be a whole bunch of trades that your back test took that you didn't, and then you go sum those up over time and see what you could potentially be missing out on, to know whether or not you even need to do anything, right?
Yeah.
Because you might be doing it right just the way it is.
You're totally right. You could, by analyzing your results and looking at what's consuming the buying power, yeah, you're going to get a lot of ideas. One might be just skip those.
Yep.
But you're right. One, the data might tell you, hey, you shouldn't be skipping those at all. Like those are the only ones you should be taking. And if
Hmm.
that's the case, then there's lots of things you could do there. You could make sure you're only looking at those situations. You could get rid of the trades that are consuming buying power that aren't really doing that much for the strategy. I mean, there's so many ways to improve things there. But the first step is like digging into the details. And there's just so many details to look at here, and that you can't just gloss over and ignore. I mean, there's so much to this to dive into and improve in lots of different ways that you might not even think about until you look at the data.
So, all right, let's say you've looked at it and you're kind of okay with the fact that it takes these big trades every now and then and maxes your buying power. What's next? Is it more just optimization? Do you want to just shrink your potential total trade pool into more and more of those best trades? Or is it one of those that you use the time? Because this is something that I do a lot when I'm maxed out on buying power. I think the one thing that we can both agree to avoid, which a lot of people would probably do, is okay, I'm done. I'm going to go to the beach and just do the bare minimum work. I always use that time to try to come up with the next potential strategy that hey, hopefully your account grows over time, and maybe that will free up some trading, or you get income from another source you can put in and that will free up some as well. But what does the person do when they've kind of hit that maximum cap and they don't really see a way around it? Is it, again, less trades, or is it just work on something else in the meantime?
So the trader that came to me with this problem, when we looked at their trades, they were trading, he was trading three different strategies. And the one that was running out of the buying power or consuming the buying power wasn't performing as well as the other two strategies.
Hmm.
It was still profitable, but it wasn't as profitable. And it was taking more trades than the remaining two strategies. So what do you do there? Well, in any strategy, it's always better to start with something that trades more often
Yep.
because you have a lot more flexibility in improving the strategy. So what we did there is we took that particular strategy and ran it through the strategy cruncher to figure out, okay, how can we have this strategy take fewer trades, but the trades that remain are more profitable than average? So we basically were able to get rid of, say, a third of the trades. So it's consuming more or less buying power,
Hmm.
but the trades that remain are more profitable. So it's like a double way to win here. So,
Well,
and what you end up with is just more efficiency.
and that's what I was getting at, because I think when I feel like I'm doing really well and kind of cooking with gas and everything, is I'm walking kind of a razor's edge of getting right up to that buying power all the time, but then not missing too much trades after. And I think that's the game that you have to play when you reach that level. As we've kind of been reiterating, it's a good problem to have that you've got so many good trading strategies that you've back tested, they're running and they're making you money. That's great. But now the game just shifts, and it's that, how close can I go to that edge to be maxed out as much as I can, but then not miss trades, and kind of back and forth. And I think that ends up being a really interesting game of kind of optimization, where of course you want to make sure you're doing your optimization correctly and all of that, but you want to, okay, hey, I've missed these 5 good trades because I was maxed out on buying power. Let me kind of tighten up some filters and try to see if I can make my strategy a little bit better. But then you'll come across the other problem where you say, well, now I'm not utilizing all my buying power at all. So either loosen it up or create another strategy or do something like that. So it's very much feels like kind of an ebb and flow, a game that you probably will never be done, but you're just trying to stay on that line as best as you can.
Yeah, and think about the situation where the one I just described, where you found the strategy that's consuming the buying power. It's not really performing like the other ones. You improve it so you're basically making it more efficient.
Yep.
You are taking fewer trades, but the average profit is way higher.
Hmm.
I mean, what you're literally doing here is you are working on your path to confidence. You are now more confident in that strategy because it's more profitable. The equity curve looks smoother. The equity curve is up and to the right. There's the next step for that, once you realize you have some buying power, is to and you're figuring out which of these profitable strategies to scale next. That's going to be, all of a sudden, that's one in the mix that you can scale up. So
Hmm.
this is exactly, I mean, this is exactly how traders get better and make more money. And you're right, it never stops. And I mean, you can tell that like these problems are fun to solve.
Yes. Yeah, because you're starting from a good place. You're not starting from losing a war and trying to figure out how to win a war, right? You're starting from a war that you're winning, and you just want to beat them a little bit better, right? And
Yeah.
those are the times, again, that I think it's the most fun to not only be a trader but to be a systematic trader. As you look back at the end of the day or the end of the week, and your account is growing, and you're making money, and that's the goal. And your goal should always just be, how do I make more? And that's, I think, a big thing to hit on, because these are the times I find where most traders could start to get a little lazy, right? They can start to, okay, at the end of the week, I've made X thousands of dollars, and that's great. I'm going to take some of that out, buy some beer, and do whatever. And then they kind of eventually, when strategies degrade or change or something, they've either are behind the eight ball or just missed opportunity, right? Just like what you talked about. And this is why I think, again, always recording, always looking, always moving. And it helps dispel something that I think we dispel at least once an episode of systematic traders, which is you're not just setting up a bot and going to the beach and having a good time, right? There's that work, and the work is just different, right? It's not, you're not pressing the button to buy, sell stocks all day long. It doesn't mean you're not doing stuff. You're, refining things as they go. So again, a good problem to have, but a problem nonetheless. And I'll be interested to see if there's any comments of people who we're still stuck in the buying, maxing out buying power is a bad thing. I wonder if that's still going to be a revelation to some, or if our audience has already been there.
Yeah. Well, I'll mention a couple more things. So there's another example of a different trader that I worked with where we dug into this. And it turns out that the trades that were consuming the buying power were the most profitable trades. And how do we solve that? Well, you get rid of all the other ones that aren't contributing. You could just lop those off. And then you figure out, okay, how can I get the biggest size possible when these trades come by? And that's really, I can tell you from all the traders I've worked with, that is, when you're in that mindset of figuring out of the trades that I'm taking in this strategy, how do I trade those with the biggest size, the ones that are the most profitable? That's literally what you do when you leverage up. And that's how traders make a lot of money. I mean, that is what they do. So, we've talked about scaling up what you're doing in your strategy on episodes before, but it's hard to understate how important that is and how much it can improve your profitability. Going from something where you're trading, does it meet your criteria? Oh, okay, you're trading it with risk X. From, okay, it meets my criteria, how much risk am I going to take with it based on a probability that I know is accurate? That's a big difference. And it doesn't take much to start thinking about that, but that's really what we're talking about. This is going to put you in a mindset where you're down the road of thinking that way. And I will guarantee that will improve your trading over time when you have that mindset.
Well, and let's also go, just while you were talking, I just thought, have you ever found anyone who kind of always uses as much as they can the buying power they have, like on purpose? So what I mean by that, instead of using kind of a risk per trade parameter, they use, maybe percentage of buying power remaining. It's something that I've just been thinking about. If, for example, I know on average my strategy will take 5 trades a day, right? Just for example, does it ever make sense to, instead of doing a risk per trade, to change that and say, well, if I know on average I'm going to take 5 trades a day, to take 1/5 of your account in every trade? Have you ever come across successful, I guess, buying power management in that way? Or is it always the way we've been talking about, where you just, take more and more positions till you kind of hit that upper limit and then deal with it then?
Yeah, I have run across traders and systems that do that. And I have a system that does that where I know that it doesn't trade like X number of times a day, but I know there are going to be times where I want to use my entire account when this trade comes about. In fact, it happened a couple of weeks ago. I saw the situation, and like you kind of have to drop everything and put your entire account at risk, because it's such a good opportunity. And
just put your entire account in the trade. You said your entire account at risk. That could be construed.
Yeah, like whatever buying power you have.
The wife was about to come in and kick down the door and said, "You did what?" So, yeah.
So but that has taken me years to get to that point and to have enough confidence in it to do that. But I'm just telling you that that's where you make real money, and uh, is finding out those situations. And
So
uh,
do you liquidate current holdings to put it all in that account, or is it just programmed for whatever remaining buying power you have goes into that?
all the remaining buying power. And I know that this particular strategy um, has these characteristics, so I plan for it, and I'm flat by the time the entry window comes about for this particular strategy,
Hmm.
because I know like it doesn't happen every day, but I know there are going to be days where I need to put everything I have into the trade.
See that
So
now,
yeah,
now.
but that's a different optimization problem than the ones we were mentioning earlier.
Yeah, and that's why it was interesting to me is that if the strategy was that good, have you tested or have you tried what? Because if it really is that good, my first instinct is why don't you just kill everything and just all in on, right? Go completely to cash and then enter the trade. Is it just too fast to do
No,
that,
no,
or is it?
that's essentially what I do because so
Well, you said you were flat anyway, but if you weren't, right, would you, right, exit and then go all in? Because I think I'm
sure.
just trying to put myself in that shoes, and I think that'd be very mentally hard, especially if I'm in some really good trades already. Because obviously, when this trade shows up, it's not a 100% certainty. It's going to be a very good trade, but not a 100%. So to kind of get in that mindset where it's worthwhile, and I guess another way to word it is that if you're in cash at that period of time every day anyway, this strategy must be so worthwhile that it is better to do that than to kind of shoehorn in a different, less performing strategy into that. Which again, we're going back to a podcast that we recorded just a couple weeks ago where we talked about this, like where you're basically sitting in cash for this one event that occurs periodically, where that's better than finding lesser events that would occur at the same time.
Yeah, definitely. And so there's even another wrinkle of this where so there's a window where these trades happen. Um, some of these trades are better than others. You don't know right away. Like there could be multiple signals that come through,
Yeah.
and maybe the third one is the one that you want to put way more risk on, but you've already taken two trades. There's logic in there that says like, okay, here's my positions now. I'm going to get rid of the ones that I know aren't going to be good statistically, and I'm going to put everything into the one. So
This is fun. I like this because then in my head I'm thinking, and I did a whole video on my channel this week about how systematic trading doesn't remove emotions, and just like we talked about, it just replaces them. Because there would be times, without a doubt, that you would do that. Say you have three trades on from this, we'll call it like the mega setup, and then that third trade or that fourth trade comes in, and you say, no, this one should be better, so I'm going to kill those three and I'm going to go all in on this fourth trade. There's definitely going to be times where those three trades would have made a crap ton of money, and then that fourth trade lost money. So I'm just putting yourself in the shoes and just saying, it's you have to always know you're doing the right thing, but there's going to be sometimes it's not going to feel good, for sure.
let's just say that I'm so confident in that fourth trade when this happens that any of those concerns are like I've well beyond them, far beyond worrying about that and that's just because the situation is so profitable compared to the others, and it's easily seen in a back test. Like there's no like if you saw the results, you would say there would be no question what you should do.
Well, and again, I just love that because it just shows that getting that much confident dealing with something that you can never predict 100% is very, very hard. But when you get there, you can obviously see the benefits of it, right? Is that
Yeah.
you'll be okay when that thing occurs that you didn't want to occur, because you're confident enough that over time that was the correct thing and you should have done it anyway. Who cares what happened in this one instance that is, random at the end of the day? But at the end of if you zoom out long enough, if you didn't do this thing, the amount of money you would leave on the table would just be crazy, right? So you have
Yeah,
to.
and you don't have to have. You're totally right. You don't have to have like 100% confidence
No.
to design something like this. Like it doesn't, even if it's like slightly more confident, it still could make very good sense to do this. Um, and it might, and that's what you should be doing, and you should be thinking about that. But you're right. Like thinking about the probabilities it's hard. Humans are really, it's hard to think about probabilities, and
I
it's,
always
it's it's a really good skill to have as a trader.
Yeah, I always say mentally humans can grasp 0%, 100%, and then 50. And then anything between those
Yeah.
probabilities, our brains just can't handle. So that's why you need the kind of math. Because, sometimes when I play this one video game, it's like a tactical game, but there's a certain amount of randomness every time you do something. And it'll say there's a 97% chance I'm going to hit this shot. And then it doesn't. You go, well, that's bullshit. You're like, well, but in your head, intellectually that 3 out of 100 times you're gonna miss
Yeah.
that shot. But you see 97, you say, well, that's gonna happen every time, and it's just because our brain just doesn't. It can't do very high percentages very well or very low percentages very well. It does like the absolute extremes and then the middle ground. I think pretty good.
Yeah. So, we're coming up on time here, and I was hoping to get some more
It's our
points.
podcast.
There's
We
a
can go as
couple
long as
really
we
good
want.
points. I think there's enough content to do another episode out. So I don't. Let's just tease it for the next time. I think
All right.
there's more to talk about with this topic. So, um, yeah, I think that's probably. What do you think? I think that's a good place to
Oh,
stop
well,
there.
you got everyone teased, so I like it.
Yeah.
You'll have to come in for the next one. But yes, so just to summarize, if you're not running out of buying power, you should figure out a way to run out of buying power. And, we gave some good suggestions on what to do if you're consistently running out of buying power. And again, at the end of the day, I think it's about walking that line. And it sounds like Dave's got some good ideas to help us do that in the future. But until then, until next time, I'm Michael Noss.
And I'm Dave Mabe. We'll talk to you next week on Line Your Own Pockets.